if you understand the tax code and you know how to implement it legally, ethically, and morally, right? Whatever you think the big boys get, you can get it, notwithstanding your level in society. The only people who I feel really have a short end of the stick when it comes to taxation is the typical 9 to 5 W-2 wage earner.
Financial independence,
freedom,
financial picture,
independent financially,
financial future,
financial freedom and wealth,
financial independence.
Get your fill, financial independence and long life. Hello and welcome to another episode of Get Your Fill, Financial Independence and Long Life, where we explore ways to achieve those two goals. And I think you're going to love our next guest. Really nice, cool, interesting people come on to help us. Michael Uadiale is our guest today, and he is a successful serial entrepreneur. He's a practicing CPA, and he teaches entrepreneurs how to use the tax code to get rich. And I think that most of us are not associating those two things in the same sentence, right? Michael, thank you so much for being with us today. I'm excited to hear all your tips and tricks.
Thank you, Christine. I'm really excited to be on your show. I really love the name of your podcast to start with. I really do. Just because I can connect or relate to that. Waking up one morning and realizing, oh my God, time has gone fast, but not getting your mindset to the point of allowing it to be a limitation is an awesome thing. Yes, I am a serial entrepreneur, like you said, because between my wife and I, we have 6 successful businesses and a private foundation. One of those happens to be what most people know me by the most, which is the CPA practice, because that deals with tax planning, right? So I typically let most of our clients know when they come to us that they're not coming into what they consider the typical accountant setting, because most people, people tend to just think accountants are boring, they are stiff, and all they tell you is, no, you cannot do that. I'm an entrepreneur who really, really enjoys the tax code. And so,
So you're a crazy entrepreneur.
Yeah, well, you may say that. That's okay. I mean, really, because the tax code, in my mind, should be one of the pillars or the stand upon which anybody's financial independence or financial freedom should rest on. I get it. Most people think the tax code is just the government's way of trying to get at you or take something out of your pocket.
No, you're right, because it's their way of trying to get us to do certain things.
Exactly.
Right?
Yeah.
So I see now you are reading the tax code like a treasure hunt.
It is.
For cool things, right? Ways to save money.
I mean, Christine, really, it is a treasure hunt. So I typically would say to people who listen to my webinars, I'm like, look, the tax code is a tool. It's not a trap. Okay. And that mindset is really very important. I mean, unfortunately, I think many in my profession have been trained differently. And so, one, I feel like most people in the tax planning and advising profession are not clear on who their clients are. I think many of us tend to think we are there to represent the Internal Revenue Service. One, that's not the thing. And then secondly, there is this inaccurate perception that the highest authority when it comes to taxation is the Internal Revenue Service. No, the Internal Revenue Service is not. The Internal Revenue Service is an arm of the government that takes the tax codes and the tax laws that the politicians have put in place, and they come up with their own interpretations and guidelines on how to implement the laws that the politicians have put in place. Now, we have the tax courts, and we have the appeals court, and we have the Supreme Court that is far above the IRS. So there are times where if an advisor is not really looking at the law and looking at the examples that the lawyers and the CPAs working for the politicians used to give you guidance on how to implement it, you could just be running only with the way the IRS is interpreting it. So that's why, yes, you're right when I said it's a tool, it shouldn't be a trap. There are treasure hunts there. Just like you mentioned, the tax code is the government's way of incentivizing every one of us behaving the way the government wants us to behave.
So what kinds of things do you find a lot of success with, right? Like what kind of professions, what kinds of treasures have you found lately in the tax code that you are if I came to you and said, look, my only goal in life, I'll do any kind of job, I'll do anything you want, I just want to pay less taxes. Well, you probably say, well, then stop working, but I want to make as much money as I can and pay as little taxes as I can. What would you advise me to do?
That's an awesome question. Then I'm very interested in such a client. I think one of the greatest disservice that most of us in our profession do, especially towards the fall and the end of the year, is we begin to advise clients to stop making money, right? Yeah. I mean, because I deal with clients every day, new ones, and I hear that. And that's such a great disservice, right? Because that's not how it should work. Okay. And that's why in our firm, we have come up with our own framework of the journey that an entrepreneur who is truly desirous to get to a zero tax bracket or as close to a zero tax bracket as he or she can ever get, right? We have our framework of how to get there. A journey, even when you're flying by a supersonic jet, it's not going to get you there overnight. That's why I use that language. It's a journey. Now, that journey needs to be well planned out. Now, for most people, unfortunately, and this goes for about 65 to 80% of business owners, they are very cavalier in how they approach taxes. And what that does really is it takes off 13 years plus of your life. Because really, when you break down how much most people that are not doing tax planning are spending on taxes, if they had all that money over their average work life, they will get to their financial independence 13 years faster than many of
Wow.
them. Yeah. So I call it a 13 years plus jail term if you are casual with your tax planning. Unfortunately, because of that love-hate relationship, most entrepreneurs they only get to go talk to a tax preparer or a CPA at the end of the year. Now, with us, we have the framework, which is the decide. We call the D, the E, the C, I, D, E. Now, we walk every of our clients through that framework. And in that framework, we are going to be able to find things that will help that entrepreneur begin to get to close to a zero tax bracket. I mean, have you ever wondered why people think, oh, the very big corporations, they get away with paying next to nothing in taxes, right? So I typically say, okay, if you want to have what the big boys have, then you got to learn how to behave like them.
Exactly.
So, I mean, it's as simple as that. The tax code really, for me, is very fair. It's not equitable. Let's not mix those two words, but it's fair. It's fair to the extent that if you understand the tax code and you know how to implement it legally, ethically, and morally, right? Whatever you think the big boys get, you can get it, notwithstanding your level in society. The only people who I feel really have a short end of the stick when it comes to taxation is the typical 9 to 5 W-2 wage earner.
Yeah. Yeah. Your
Because
W-2.
yeah, because the tax code is not there's little you can do. Okay, you get to put some money into 401k, you get to put some money into some health savings plan, you get to do some Roth. I mean, those are like crumbs on the
Yeah.
table, right? That's the only thing that is really available to most W-2 wage earners. But if you're a business owner, if you're an entrepreneur, the code is designed for you. The first thing, that's why we have the D, That D for us stands for deductions. Now, Section 162 of the code tells you everything that can make any expense a deduction, right? And so I typically will say to my audience or listeners, never come asking me if I can deduct X, Y, Z. Your question should always be, how can I deduct? Right? Yeah.
Yeah.
Because those two questions are not the same. The mindset there is very different. And this
Right.
is not about trying to play games or gamble with your taxes or trying to stand in front of an 18-wheeler truck. No. The idea is this is a code. The code is a rule. Section 162 of the code tells us what are deductible business expense. It says, okay, I have it as BOND in my bond acronym. B meaning it has a business purpose. O meaning it stands for ordinary or typical. N means it's necessary to either expand your geographical market or increase your profit. And then D, you document it. So I typically will use something as basic as the shirt I'm putting on. If I want this to become a deductible business expense, then I should be willing to change it from what it is right now and put maybe the name of my company here.
Right.
Just doing that has turned it translated a ordinary share to becoming a business expense. Okay. Right. So the first thing is every entrepreneur must learn how to optimize their behavior so that most of their cash outflow can fall within the framework of BOND that allows them to make as much deductions as they can. So that's the first of the thing. The second is what we call the E. The E stands for the entity, meaning how is your business organized? Are you set up as an LLC that files taxes as a sole proprietor, or an LLC that files taxes as a CEO and S, or an LLC that files taxes as a partnership? Or even still, are you set up as a corporation and that files taxes as a C Corp? Now, that's really very important because how your business is operated really not only impacts asset protection, it greatly impacts your taxes. Again, like I said at the beginning, taxation is a long-term journey. So a good example with the new tax law, they just even supercharge one provision there that talks about the qualified small business, right? What does that say? It's pretty much saying if you found a company or you have shares in a C corporation within the industries that it qualifies for, and you hold or you are a shareholder of that business for 5 years or more, you can literally sell that business after 5 years and you pay zero capital gains tax. So if your business falls within that industry, you have no business most likely forming an LLC that's going to be filing taxes as a C Corp, as an S Corp, especially if you know you have a plan to want to exit that business by way of a sale. I think the mistake most people make, they try to just cut corners. My cousin or my friend has an LLC, he does business and an LLC, and that drives how they set up their business. Unfortunately, within my profession also, many CPAs are so quick to just tell you, oh, make your company an S Corp. No, there's a whole totality of things you want to look at. Understand what is the goal for this entrepreneur. Where is he or she trying to get to? What is their planned exit for this? Because in the totality of it all, that S corporation may, in the short term, be good for tax reduction, but in the totality of that person's lifespan as an entrepreneur, he or she may be ending up with more taxes than you think. Because somewhere along the line, there's going to be an exit, and that S corporation may not be the best. So that E is a very important thing that we look at, which is what the E stands for. The next thing, which is the C, is for credits. I love credits way more than deductions. Okay. I mean, because even a non-refundable credit, in most cases, it's 4 times more powerful than an ordinary deduction. Because what I really credits for me is the government literally writing or paying my tax bill or literally giving you money to pay your tax bill. That's what a credit is.
Right.
Because when you look at the flow of a 1040 tax return, you find that It's when everything has been put on that form that the credit shows up. And so let's say the person ends up with a $20,000 tax liability, and then he or she has a credit from whatever thing for like 10 or 15,000. The net taxes is now 20 less 15. So the credit is a dollar for dollar reduction on your taxes. It's very powerful. There are thousands of credits in the tax code. Unfortunately, too many times, both my profession and business owners are not looking deep enough to say, what are the credits that are available, right? And be able to really tap into them. So that's what the C stands for, credit. Number 4, you got to learn to shift your income legally from the higher tax bracket to the lower tax bracket. Most people who are still raising kids, they have kids, and too many times they may even have parents who are retired and on Social Security, and they have nothing else. So there are so many ways you can shift income. The moment your income bracket is going up and up, then so also your tax bracket is going up and up. Now, somebody could, I don't know who I was looking at his financials yesterday. He's having about $2 million, right? From his business income, his W-2 and all of that. And this gentleman is a physician. He has 5 kids. And then, yeah, and I started asking him the age of those 5 kids. Guess what? The oldest of them is in college. And of course, he's paying for that. And I said to him, so why is any of these kids, for example, not working in any of these businesses, right? And then I asked and I said, so how much are you spending on the one that is in college? And he said he spends about $80,000 a year in totality for him. I'm like, okay, this is an adult. Why is he not either a shareholder of one of your business, or why is he not an employee in the business? Yes, he may pay taxes on his W-2 earnings, but guess what? You are already paying that money without getting any tax benefit. So there are many ways to shift income, okay? So that's what the I stands for. The other D stands for debt, D-E-B-T. There are what I call good debts. I'm not talking of you taking credit card money and going on a vacation. I'm talking about knowing how to use leverage. If you really think about it, you step back, you want to ask yourself, why is real estate very popular for most people who want to be financially free? It's very popular because most times you are leveraging other people's money in the bank. Those people who put their money in the bank, they have no idea with what to do with the money. And then the bank gives them 2-3%, and then they loan that money to you for some spread. But guess what? Yes, you pay the bank an interest expense, but you know what? You get all the benefits of the assets that you buy with that debt. And when you get all the tax benefit, it supercharges your tax picture, okay? And that's why for many of us, we've just been like holding a bullhorn and getting on the mountaintop and really screaming, hey, 100% bonus depreciation is back, okay? Because I mean, really, it was great when they started in 2017 and then they stepped it down, supposed to end up this year. But to bring it back and say it's permanent, really nothing is sweeter than that. Because if you truly look at how to leverage that 100% bonus, meaning you put in 30,000 into a particular tax strategy, and maybe that 30,000 gives you basis in an asset that is now worth 300,000. 300,000 multiplied by 37% marginal tax rate, that's $111,000 reduction in taxes. So just think about it. I put out 30,000. I'm getting my taxes reduced by 111. I'm giving you real figures because these are things I do every day. That taxpayer has just put himself in a position where he is reducing his taxes by no less than $80,000. So you now have more money if you are a disciplined investor to go put into another real estate or some other transaction. So that's where I call debt a good thing. That's why I always say good debt and taxes make you rich. Because if you know how to leverage that, yes, most people never make that connection. They think taxes is about, hey, the government being an unwanted partner to you. That's not exactly how it is. And then the last thing, which is E, go ahead.
No, go ahead, finish your thing, and we'll
The
talk,
last
go back.
thing is E, which is elimination. There are some very super turbocharged tax strategies on steroids, which really, the higher you go when you're really making millions of dollars in income, those are the kind of strategies that can really become applicable to help eliminate taxes. Now, I already talked of one, for example, which is the Section 1202 qualified small business stock. That's an elimination strategy, right? Because at the end of the day, if you sell that business, you walk away without any tax liability for you from the federal side. So really, the tax code is just an amazing tool for those who know how to use it.
Absolutely. Going back to what you were saying before, a lot of people think that the ideal is to own property with no mortgage. And I just think, yeah, and then you're paying taxes on all your income. Why would you do that when you can take out a loan, use the loan money, tax free, and have your tenants pay back the loan? I just, it's so hard to get people to like think that way because they have this association with like, oh, wouldn't it be great to not have a mortgage? Like, no.
So I say to people, if you are afraid to leverage, then maybe you don't trust the assets that you are putting that leverage on.
Oh, great point. Yeah.
Because what's the essence of taking on a liability? It's to buy an asset. What's the purpose of an asset? The asset is to generate income. And then if that's a great asset that gives tax benefits, it just also increases your return on investment. So that's why you see real estate is a very popular thing, right? Yeah, when people talk about not having mortgages on real estate, I honestly, I'm never able to relate to it. Like, I will stop there. I don't want to go further than that.
You need another CPA. You need a different CPA who's going to go down that road with you because
Yeah,
I can't visualize why this makes sense.
I get dinged by some of my professional CPAs when they listen to some of my podcasts. And I sometimes say, many of us CPAs are afraid of money. And we project that fear on our clients. Yeah.
Yeah.
So that's
That's
what's
interesting.
happening.
That's interesting. But it's true though, isn't it? I mean, there are a lot of people who have money is a funny thing, right? There's a lot of psychology that goes along with money.
Yeah.
And we've spent a lot of time villainizing rich people, right? Like Scrooge and right, ever since we're kids, like all the bad people are always the rich people. And then you grow up and say, "Oh, don't you want to be rich?" Like, "Oh, you mean like that mean person that I've been watching on TV every Christmas since I was 5 years old?" Like.
I I I have a very different framework and relationship with money. And that comes from my upbringing. I grew up seeing a dad who was very wealthy, right? And I grew up seeing him grow broke in my lifetime when I was in college, right? To the point where he couldn't meet his obligations even to us as his kids. And so that stuck in my mind that I never want to get there. Okay, so for me, um, my wife will always say money is neutral. It's what you do with money that makes money either good or bad. Okay,
Exactly. Yeah.
so I will never villainize people who are extremely wealthy because most times people could make money by luck, but if he or she or somebody is able to retain the wealth they have acquired, they have some brains somewhere.
Yeah, exactly. And there are plenty of poor people who are jerks, just like there are plenty of rich people who are jerks, right?
Exactly,
It's doesn't
exactly. Right.
one doesn't follow the other.
Money will only amplify the reality of who you are,
Yeah,
in my
exactly.
opinion. If you are
Exactly
a
right.
good, great person, money will be amplified and people will see that goodness more in you because you are able to do more good with it,
Right.
right? But if you are a mean person and you have a lot of money, that meanness will be magnified because you have money that can be used to amplify that meanness. Yeah. So
Right.
that's how I
Exactly.
see it.
Yep. It's just a tool to help you be
Yeah.
whoever you were going to be anyway.
Want to be. I mean, my wife woke up this morning and then she was like, I think she was talking to herself, but I heard her when she was saying, and I said, what's that? And she was lamenting something she was reading yesterday about some widows in Africa, where I am from originally, and the kind of lifestyle they live, right? And here's my wife who does a whole lot of philanthropic stuff. And she was like, really, there was this holy restlessness in her that, oh, I need more money so I can help
More
impact that
people.
more. So it's just a tool if you know what to
Exactly.
do with it. Yeah.
Exactly. So, Michael, how does it work? Like when you first start working with someone who has not been implementing your strategies, what kinds of changes are they likely going to have to make in their businesses? Or, how does it work? How do you kind of get started with people?
Um, we have a menu of services. And the first thing we like to always do in our menu of services with a new client is what we call the financial health assessment or the dream exercise. So I think most people can relate to a vision board, right? But so when they come to us, I think that was always a shock to most people because when we make them do that exercise, for some people it's uncomfortable because they feel like, are you guys psychologists? Because really, yeah, what we do is we give them a link to one of our softwares and they populate in there all the assets that they have. And they also populate in there all of their liability and debts. Okay. And then we then do the dream exercise. In the dream exercise, believe it or not, I put on music and I get them to transport themselves to wherever they define as their happy place. And I ask them in that short exercise to kind of tell me who they see in that happy place. Where is that happy place? Who are they spending that happy time with and all of that, right? And then I turn the music up and I make them answer to give me a picture of that. Okay. And then we move it to the next step, which is you have your ideal of where you want to see your life. So what's your timeline to get into that happy place? Okay. So I am able to take something most people never really want to address. I bring it out before we start translating that into numbers. Because if you do the dream exercise today and you say you want to get to that happy place 5 years from today, we already have your assets and your liabilities, right? Then we are able to say, based on what we see, the ability to get there in 5 years is not realistic except you tweak one of four things. Either you are tweaking the time to get there or you are tweaking how you make money. Because if you're making money and the way you make money is only returning 6% return on investment every year, and you want to get to your happy place in 5 years, and your happy place is defined as you having about 250,000 every year without you doing that 9 to 5 job, then something has to give. It's either the timeline is changing, the way you're making money is changing, or you really turbocharging how you plan taxes and a couple of other things. So that's always the first thing we do with anybody, because that mindset shift, it does a lot of wonders. I mean, it's almost crazy that most of us spend more time planning a 1 or 2 weeks vacation than we do planning our tax. I mean, our financial picture. I mean, really, people want to go on a vacation next year to Mexico or wherever. they are already planning it out this year. They're saving for it. They're picking out where they want to visit and all of that. But
Yep.
they wouldn't put even 5% of that energy and time into what will make that vacation stress-free. So that's our first thing. Once we get that, it's off to the races because now we understand your mindset. We have hopefully helped to move the needle on the mindset. Then we understand how you make money. Then we build our tax strategies around how you make money. Like I said at the beginning, if you plan taxes, it's getting out of J card 13 years earlier. Okay,
Yeah.
so that's really basically what we do with most of our clients.
I love it. I think that's awesome. Because it's true. I mean, I do the same thing when I work, I help people become real estate investors. And that's the very first thing we do. Like, what are your goals? And how long do you need in order to get them? Because that is going to define the strategy. Are you comfortable with the amount of risk, with the amount of work, with the amount of whatever that it's going to take you to meet this goal? And if not, then let's, modify, let's bring this into reality because if you don't know what you want, right? Is it Lewis Carroll, if you don't know where you're going, any
Exactly.
road will get you there,
Anyway, we get you there, exactly, right? Because you don't want anything. I mean, I've been working with a client now. I've had 3 sessions with this couple. And what am I trying to get them to achieve? I've been trying to get them to achieve in 3 sessions, clear 3 to 5 marks definition of the kind of real estate properties they should invest in. Because I told them, you can't be talking about real estate when there is no clarity as to the kind of properties you need to be in. I said there are single families, there are duplexes, there are triplexes, there are apartments, there are commercial, there are storage, there is ROV rental. I said there are so many things. I said, so I need you to kind of bring that funnel down. Then you got to look at the location. Where do you want it to be? What kind of market do you want to be? Do you want to be in the growth market where you get equity, but you are not really making cash flow? Do you want a hybrid of cash flow and equity? Or you just want cash flow? So there are so many variations. So yesterday I was really very ruthless with them. I kept saying, no, we're not moving forward. We got to get this clear. I said, because if you get this clear, you will find the kind of properties that is a good match faster. It's not going to be looking for a pin in a haystack anymore.
Right. Exactly. Exactly. So speaking of real estate investing, tell me about the new software that you're rolling out.
Oh, I am excited about that. It's been something I've been marinating in my mind for the last 7 years, just because sometimes my profession is a little bit slow when it comes to technology. That's just who CPAs are, right? I mean, I was in a tax conference some 7 years ago, and it was all about real estate professional. And most of your listeners can relate to that. Now, yes, the real estate professional status is great, right? Because what does it really do for you? It helps you turn all the losses you make from depreciation, cost segregation, bonus, and all of that. It allows you to be able to translate those losses from being passive losses to becoming active losses. Okay. So that's all what Section 469 of the tax code is about. Now, unfortunately, most real estate investors, they're so focused on just moving to the next deal, and the other. Then they forget that, well, that law changed in 1986. The IRS is almost like using it as a trap to beat on a lot of people. So many CPAs even do not guide their clients very well on how they can truly qualify for the real estate professional status in a way that is foolproof. So what we've worked on, they worked on it. I wasn't satisfied. I sent the design. I sent the app designer back to the drawing board. So our app really is going to allow. It's actually an app that you can consider 3-in-1. It allows you to be able to track your activities as a long-term rental investor. It also allows you to be able to track activities if you are doing short-term rentals like Airbnb and stuff like that. And then thirdly, it also allows you to be able to track other non-real estate activities for which when you invest in them, the IRS requires that you be an active participant. Now, on the real estate side of it, the way we've designed it is really amazing because we've built in and we've done quite some integration with many other existing established apps. So that, for example, if you are a subscriber to the app, the moment you start driving, it's going to pop up with a notification and ask you, is this drive for a business? And then you can swipe yes. And if it's a business, is it related to any of your properties? And you can just pick that either before you start the drive or after you come back for the drive. So the tracking is great. We've built a lot of AI tools into it so that you can truly walk through the maze of whether or not you qualify as a real estate investor. And the greatest thing is we've done it in a way where, because I'm a CPA, I look at it from that perspective of, I want my clients to be able to give me access to that app so I can look at their hours and be able to track. So we've built that in so that a user of the app can invite their CPA into it. Just like, I don't know if you're familiar with Intuit's QuickBooks. Now, you can be the owner of your QuickBooks, but you invite your accountant to be a user. Okay, so the accountant is able to look at it and give their advice. They may not necessarily be able to tweak the hours because we want it to be that the subscriber of the app is the one really doing that. But the CPA can be checking and seeing where they are. And there are notifications. So every week or every month, it kind of helps you know how close you are to qualifying to being that real estate professional. So there's quite a whole lot we've put into it. So I'm excited about it. And it's going to be available for people to start checking it out soon.
Excellent.
Yeah.
Excellent. So how about tell us about your podcast?
I don't do much of a podcast myself. I try to just host a monthly webinar where I just do some high-level teaching on one strategy or the other. Okay. So like I just finished one 2 weeks ago, which I call Cash In Now with the most biggest bill in tax history, right? And what I did there was to give 4 case studies of things in this new tax bill which can really transport people from a high tax bracket to the next.
Awesome.
Yeah.
Michael, I have loved talking with you. You're just like, I can just see how like excited and pumped you are and like how fun you find it to be in the tax code. And, there has to be people like that, right? There have to be people who are wading into this mire of tax law so that they can really understand it and help people like me who, would fall asleep instantly on page one.
So I could give you a personal story of how that came to be. When I came to this country some 28 years ago, right, I worked in a corporation and had lots of stock options. And of course, I had gotten my CPA behind me, but I wasn't comfortable then about just being the only one doing my taxes. So knowing that I was getting this whole big stock option, I engaged a CPA to guide and do my taxes. I mean, for year 2000, what I paid him was a lot of money because I knew I was going to have a big income because of my restricted stocks. At the end of towards April 15th, I was still shocked. Year 2000, I got a bill of about, he said to me I was owing about $56,000 in taxes. And honestly, for a guy who was already a CPA, I wasn't practicing then, I wasn't expecting that bill. That was where I'm like, okay, this has to be different. And then I started seeing that there were lots of people in that kind of space. That was where my journey started from. I'm like, no, there must be a different way to do this.
So that's it, right? You said, I'm going to find ways to save myself money. And then that just gave him, and
Yeah.
now I can share that with other people. That's
Yeah.
awesome.
So it's been a personal mission that started with me. Yeah.
Yeah, beautiful.
Thank you.
So, Michael, is there anything that you wish I would have asked you or anything that you want to make sure that people take away from our conversation today?
It's simple. I think what I would be saying anybody should take away from our conversation today is get in touch now with a good tax advisor. I can be everybody's CPA. I get that. And I don't have more than 8 to 10 hours of work live every day. But find a good tax advisor and get into conversations with them now. One of the ways you know a good tax advisor, he or she must be able and willing to ask you plenty of questions. Yeah, it's so important because it's only when he or she asks a lot of questions, then they have the very minimum to start with. I mean, when you go to a doctor for the first time, they are asking you lots of questions in addition to this pile of forms you've completed, right? It's no different from our profession. I will end up by saying to any business owner, entrepreneur, really, the tax code is a tool. The one thing I've learned running a CPA practice the last 18 years, the ultra wealthy never take their tax bill on the surface. They are strategic in planning what that amount is going to be. I mean, I have some of my clients today, the conversations they're having with me has nothing to do with this year. It has to do with some investments and what they plan to do 2, 3 years from today. And then asking me now, how do we begin to structure that deal so that when they pull that trigger, when that time comes, it is consistent with the rules and let them walk away from it with minimum taxes. People must have that kind of relationship with a good tax advisor.
Yeah. And I think I would echo or add something to your idea, your description of how you can tell that you have a good tax accountant. I would say it's because it's that they're not afraid of getting audited, that they're like really embracing, like, how can we squeak every penny out of this tax that, how can we save you every penny because it's a challenge and it's fun. Not like, oh, don't do that because, well, we're just going to err on the side of caution because we don't want to get audited. That if they start talking like that, like, oh, don't worry, we want to be safe. As soon as they start saying that, you just stand up, you walk out the door because that's not your guy. You're not with Michael at that point. You
Yeah.
say,
So
I got to go talk to Michael Uadiale because you are not him.
thank you, Christine, for adding that. And it's amazing. So if you come to look at it, there are business owners today who very well qualify for some very basic fundamental things like the home office deduction. And when I ask why they are not taking the home office deduction, because in my inquiry, I see they qualify, and guess 9 out of 10 what the answer is. Oh,
I don't want to get audited.
my CPA said, let's not take it so we don't get audited. I'm like, really? That's a law that has been codified, recodified, reestablished, and reaffirmed, made even more powerful since 2017. And somebody is saying to you, don't take it, instead of he or she saying, okay, this is how we document it and
Right,
do
exactly.
it. So thank you for
Exactly.
that.
Exactly. Awesome. Michael, I'm just energized and I've had a great time talking to you today.
Thank you. Thank you. I appreciate that too.
And I
Okay.
know people listening, if you've ever paid taxes before and didn't enjoy it very much, I think you should. And if you know anybody who's ever paid taxes before and did not enjoy it, you should forward this episode to them because they're going to be psyched. And they are going to thank you so much. You can get in touch. Well, Michael, what is the link that we're going to put in the show notes? Is that the best way to reach out to you, or do you have another
Yeah,
way?
I think the best thing to reach out to me is either to just email me directly at taxes@smith, CPA, TAX as in zeros, ES, taxes@smithcpa.com. That's a very easy way. There's somebody that monitors that email because that's where a whole lot of people come through us. And then we also have a link. I think I gave that to you, which is a school platform where I have video courses, and it's a very low entrance way to kind of have a smell of the good food. And when you have that taste.
Yes, excellent. So you'll find
Yeah.
those in the show notes. And
Yep.
I recommend, like I said, even if you just want to explore, even if you just wonder if there's a way, am I possibly paying too much taxes? Then, you have to talk to Michael.
Yeah, get in touch. And we love it. It's fun for me. I enjoy what I do. That's why I've been able to stay in the profession now for 18 years, going to 19. So even though I keep threatening my kids, I want to step back. But they're like, Dad, we don't see you wanting to step out of this.
No, you can tell it really lights you up. It's beautiful. All right, awesome. Thank you so
Thank
much for
you.
joining us today. Share Michael's message with all the people you can think of because it's an important message. And be sure to be here next week and see what we have in store for you. Have a good one.
Thank you. Bye-bye.